the message to the audience is that there is no such thing as a digital industry. It doesn't exist. Digital is a platform that has transformed other industries, be it financial services, telco, retail, but there in itself, there is no such thing as a digital industry, right? So I think the closest you might get to a digital industry are probably the technical platforms or technology platforms that exist. But if you look at where digital manifests itself most pronouncedly, it would be in, if you like, two facets. One is in digitizing traditional industries like telco in the ways that the telcos or the banks or whatever would do business, right? So, once upon a time, if you were to check your balance on your bank account, you'll have to wait for your monthly statement to come. You browse through that statement and you go, as of the 30th of the previous month, I had this much bank balance, right? Of course, it would have been sort of 6, 7, 8 days before since the statement was published, and you may have already spent a little bit more than that, right? To this point in time now where, with 2 buttons on your smartphone, probably some authentication via biometrics or your thumbprint or whatever, you can, sort of real time know what your bank balance is. And so that's the one facet where you're saying digital transform traditional industries. But the space that we tend to play in, and the space that's a little bit more exciting for us, is how we take digital and really kind of, if you like, create new business models on serving customers in what would be traditional business lines, right? So in the area of financial services, really kind of coming up with new ways of, if you like, serving what customers might want, right? And we can double click on that in a short while if you want to, but as an example of that would be loans, right? Where historically banks would give loans in a certain way. Fintechs have now completely disrupted that process, completely disrupted the way clients are being served in something as basic as providing a loan. I think the thesis is a pretty sound one, and there are several, if you like, success stories now of venture buildings tapping into assets, latent assets, I should say, of organizations like a telco or a bank or what have you, right? And so because the thesis is actually a very sort of proven thesis, it makes the pitch a little bit easier, right? The fact that, we are able to build businesses to unlock those latent assets such that then we can create new sources of value. One of the arguments that we typically use is that as a telco, you are bound to a certain extent by, if you like, the EV/EBITDA multiples of a telco. So any new EBITDA that you're going to generate is actually, because you're part of a telco, is not necessarily going to give you the enterprise value that you might be looking for, right? And so we talk to investors about unlocking that value, typically by creating new offshoots, new businesses, like what we've done with ADA, what we've done with Boost Holdings and whatnot. It is a pitch that I would say is becoming a lot simpler. I think in the early days, whilst the thesis was a sound one, I think there's always going to be a question mark around, the track record of, if you like, internal venture build units being able to create these kind of success stories, right? If you go through historically, not a lot of venture build companies that are kind of embedded within a large corporation have been able to succeed in that thesis. So I think, back then it was a little bit more difficult, but now, given that we do have some track record in the form of some of these companies that we've built, it's become a lot simpler to kind of convince them that, yes, we have a sound thesis, and at the same time, we do have a track record of sort of going out there and building these companies. The thing that I personally am very excited on is the interstitial between digital and ESG. And now we're talking about 2 big buzzwords in the corporate world right now, right? There's a lot of investments going on in ESG, there's a lot of investments going on in digital, right? But for me, the intersecting point between the two is where I think a lot of attention is going to go into in, if you like, kind of the next 3 years or so. As of right now, money is being put into kind of more digital spaces. So as an example, Q1 of 2021, 56% of all PE and VC investments went into fintechs, right? Which is an astounding figure. First of all, VCs and PEs don't just put money into tech companies; they put money into an array of different companies. But then within tech, they're putting 56% of all the total dry powder into this one segment called fintech, right? That's phenomenal. But if I look ahead, where is that going to go? I think the money is going to start shifting into where technology is being used to solve some of these problems that kind of ESG is designed to try to solve, right? Let me give you an example, right? When you walk into a shop and you're buying a shampoo, you kind of want to know whether this shampoo is made from sustainable palm oil, right? As an example, right? And we can now put sensors in plantations to actually track it all the way to the shelves, such that you as a consumer, and by the way, I'm marrying two things here. I'm marrying IoT with potentially blockchain, right, or hyperledgering, such that I can actually track and trace every single one of the ingredients that went into making the shampoo, whether it was planted in a sustainable way, right? Whether you had to burn forests to actually plant those palm trees to then grow those fresh fruit bunches to then milk it for your shampoo. I think those are the things that is going to become very, very interesting over the next 3 to 5 years. I think there is sort of a real crisis with the world right now, with the environment right now. And if digital technology is not being deployed to solve those issues, then we are not kind of using the full potential of digital, right? So that's the space that gets me really, really excited. I hope Axiata Group can play a role in that. I know Axiata Group is very, very keen on making investments around ESG. We have made the net zero pledge, but if we can now take that pledge and combine it with all the innovation that we've done in the digital side and find the intersection between the two, I think we're on to a next winner. Let me touch on the concept of super app and how COVID has affected that, right? So pre-COVID, I would put a lot of money behind, if you like, the super app phenomena. Post-COVID, I think that's shifted a little bit, right? And the reason being that because we're spending more and more time now on digital platforms. In fact, the number of apps that, on average, a Southeast Asian will now search to find the product that he or she will want to buy has shifted from 4 point something pre-COVID to 7 point something pre-COVID, right? And the reason why it's gone up so much is because actually we're very comfortable now browsing through multiple sites. We're very comfortable with spending a lot of time on the digital platform because guess what? We can't go out and shop in the traditional offline way anyway. So we'll do our homework, right? And we don't mind going through, sort of 6, 7, 8 different apps. And that's why the average has gone up. But that basically means that this idea of a single super app is less relevant now because consumer patterns have started to shift, right? So that's my kind of perspective. I think I'm slightly contradictory to a lot of sort of normal beliefs right now about the super app, right? I think once upon a time the super app was sort of the thing to be betting on, but COVID has sort of shifted that, right? Being at home has sort of shifted that. So in that sense, then no longer that keen on basically building a super app or a super wallet, if you can call it that, within the context of the businesses that we have. Such that users will continue to be very, very engaged on our platforms. And some of these use cases, we of course will monetize through it. Some of them, it will be there just to kind of create the engagement. But going forward, to answer your question, what's going to differentiate? Interestingly enough, my view is it's going to go back to the fundamentals of serving a customer, right? Which goes back to customer experience, right? Which, by the way, telcos try and have been focused on doing a very good job of that for the longest time. I think at the onset of the digital revolution and when wallets came into the markets like what we had in Malaysia, in Indonesia, people played around with two maybe three different attributes to try to attract the customers. One, of course, was just innovation. Well, it's cool, right? This is new, scan and pay. I mean, I've never seen scan and pay in Malaysia before. When Boost in Malaysia introduced that, we were pioneer, and it became kind of very cool, very hip to kind of flip up your phone and scan, and before you know it, you have your chicken rice, right? So that was one. The other one was then convenience, right? The idea that you don't have to kind of just dig into your wallet and pull out change and exchange cash and then take that change, put it back in there, lose change and whatnot. I think convenience sort of played the next role. And then the third one, when the proliferation of wallets became very, very prominent, was value for money, right? And so you saw a lot of the wallets competed on deals, right? And in fact, actually, they still continue to do a lot of that. I think if I were to sort of take out the crystal gazing ball and look at it, to me, in the next 3 to 5 years, we will be down to probably about 3, maybe no more than 5 different wallets in any single market. Very similar to sort of the telcos, right? You don't have more than 5 networks in a particular country. So within that space, then the players will compete to an extent, to a very small extent on the value, because you don't want to keep killing each other. But I think it will go down to, if you like, sort of the experience, right? So there will be one of those 3 players, kind of very, very focused on providing superior customer experience. And then on the other extreme of that, there will be one which is, sort of the cheap and cheerful, lots of deals, but may not give you the best user experience, right? And then there'll be somewhere in between that will, kind of focus on the value discipline of innovation, right? Where you go to these guys because they'll always have the best and the most innovative things to help you solve your pain points as a user. Right, so I think the winners of the future will go back to those traditional value disciplines of picking each one of these 3 things to differentiate on. I would start with saying that there is, if you like, the barrier around digital adoption, right? So it's less to do with adopting digital financial services. It's more to do with the adoption of digital per se, right? But I think COVID has changed all of that. COVID has almost kind of become a forcing function for everyone to try to adopt digital. So if I look at, say, if you like, and I talk often about this, right? So our micro SMEs or our nano SMEs, the makcik nasi lemak, the makcik nasi ayams, the ones that are sort of, paddling very in pasar malams and whatnot. In the past, they didn't need to do it, right? But COVID and the lockdowns have basically forced them to find alternative ways to continue trading, to continue doing business, right? And it's very clear that digital has become the only means for them to continue to connect with their customers, right? So I'll give you an example, right? And if you go around sort of housing estates in Malaysia, there's always that local corner mom and pop sundry shop, right? Where it's you go in there to buy rice, you go in there to buy coconut milk, whatever. The last minute, when you don't go to the Tesco's and the Giants of the world, and for the longest time, they built themselves a clientele which is all sort of the neighborhood inhabitants, right? People will go there and they'll know their kids, the kids will know their grandparents, and so on and so forth. It's almost like a family business that you've sort of been very used to, right? And they maintain some kind of credit line. So if you go into those shops, they'll have something called the 555 book, right? It's a little booklet where, and it's 555 because that was the brand of the cigarettes that produced these notebooks, and they used to give them away for free. Anyway, so and what you write it down is you'd write down what you bought that day, and literally, like, I would go in there and I'll pick up a gardenia bread, and I'll wave, uncle, I just took this, and then just write it down. And he gives me, a 30-day credit, and at the end of the month, I'll go pay that. Now, that has been the model that they've been working on for, donkey's years, right? But COVID has kind of completely disrupted that, right? And I think the, service providers that can find digital solutions to mimic the entire process, to mimic the exact behavior, are the ones that are now finding a lot of adoption from that segment, which was, hitherto probably very antagonistic around anything that's digital, right? COVID has forced them to do it. But the players that will succeed are the ones that have been able to build a very, very similar process around that, right? And if you look at what the Boost business unit is doing, they're focusing a lot on that, right? They're focusing, and they've basically been able to get government grants to support them on, kind of their waves to digitize the micro SMEs, the nano SMEs, as well as your local corner mom and pops. This is even more extreme than that, right? In the sense that if you don't digitize, you are dead, right? So let me give you an example, right? And let's use the telco industry because it's a perfect example. So if you, as a telco, have not adopted digital ways of allowing your customers to top up their prepaid cards, right? In the sense that, if the only way to do it is to go to the street corner shop, with a desk, buy that physical SIM scratch card, get that, little PIN number, that little PIN into your phone and get that top up. If that's the only way that you can do it, you have no business because your customers cannot top up, right? And so I think in many facets of enterprise industries, the enterprises are now forced to adopt digital channels, be it to serve customers or to sell to customers or to transact with customers, because if you don't, your revenues are going to take a massive hit, right? So it's less to do with keeping up with the Joneses now. I think once upon a time it probably was, but COVID's changed that completely, right? COVID basically said that, look, if I don't do it, I'm looking at a massive revenue decline, right? If you take, F&B, if I don't sort of put my restaurant on a food, ordering platform, then that's it, because my restaurant is shut, the government doesn't allow me to open my restaurant, how am I going to continue to do business, right? And so I think COVID has become that if you like, it's created that burning platform for people to kind of, sort of spearhead that whole sort of move towards digital, right? Whether you're a retailer, and all spectrum of it, right? From the small mom and pops all the way to the large enterprises, I think you are being forced to do it. Otherwise, there's just no way to do it, right? There's no way to continue to serve your customers. There's no way to continue to reach out to your customers and to transact with them. I think it's interesting that when you look at regulation is also starting to shift now, right? Because I think regulators have recognized that digital channels, digital ways of doing things are creating greater customer experience for the user base, right? So it is against the consumer need, the consumer wishes to have too many regulations to actually stop them from doing what they want to do, right? So there are now sort of pressures on the regulators to open up regulation such that you and I as users, as consumers, can go about doing things the digital way, right? So if you look at regulators, I think throughout all the regulatory bodies that we work with, we're starting to see innovation coming out from them, right? I mean, take financial regulation, for instance. Every single financial regulator that we work with across our footprint markets have now gotten a digital innovation team within that. And what they look for is how digital innovation can actually help them, effectively create businesses that can serve the customers a little bit better, but yet still manage it within, kind of the constraints of what the regulation was originally designed for, right? So in financial services, obviously digital banking, right? In fact, actually, we loved regulation per se, because in that sense, then it actually allowed us as a digital innovator to really kind of disrupt the industries per se, right? But then what we found was that actually, because we as a telco, we experienced that disruption, and then we found ways to kind of go around that disruption through, Axiata Digital, but also through partnership. We felt that therefore maybe Axiata Digital, reaching out to the likes of Great Eastern and whatnot to create partnerships probably is the model that can actually create sustainable value. And that's what we've sort of been doing, right? And the Great Eastern example is one of them. But that doesn't mean that we're not going to continue to push and we're not going to continue to further use digital innovation to potentially disrupt these traditional industries, right? So I'll take insurance as an example, right? So despite the fact that we have this great partnership with Great Eastern, I think the partnership has yet to achieve its full potential on potentially disrupting the insurance industry. Because in a sense, the underwriting methods are still largely done in a traditional way. What do I mean by that, right? Well, if you look at lending, we've completely disrupted how the lending process works and how it works and how underwriting works, right? Because we are using a machine learning based credit scoring engine to underwrite risks of, sort of you, Jonathan, applying for a loan, right? And we're using alternative data sources, all meld in together with this credit scoring engine, with a robot effectively kind of saying that, hey, Jonathan is good for a 5,000 ringgit loan, right? And that's disrupting the entire process and the entire traditional way of how underwriting was done. In insurance, that hasn't quite happened yet. In lending, there are models now where, yes, you may have underwritten it in a certain way, but you as an organization may not be prepared to take on that risk because of whatever risk profile that you have. But then you have platforms that allow other people who may have a bigger risk appetite to take on that loan, right? And so therefore, you have the advent of P2P lending as an example, right? But then in insurance, that hasn't yet happened, right? So as an example, if you want to, again, I'm talking in the spirit of sort of creating financial inclusion, one of the things that happens, unfortunately, a little bit too much is that on the east coast of Peninsular Malaysia, usually towards the end of the year, with the monsoon season coming in, flooding happens, and sometimes a lot of the little kampongs, they have their houses all wiped out. Now, if you go to them and say, hey, look, here's a package to insure your house, first of all, they're going to go like, well, that's what is this insurance business? I don't know what insurance is, right? And if you try to tell them that, it's designed to protect the losses if another flood comes and wipes out your entire thing, right? And then you go like, well, he looks at the bill, he goes like, what, 500 ringgit, per month for me to insure my house? Well, maybe I'm not ready to do that, right? But then if you underwrite it in a very different way, you can actually get that pricing to go down significantly, right? Because you'll then have different people who may want to kind of take on that risk, for a much lower premium, right? And then you create, if you like, almost kind of like a P2P insurance platform in much the same way. So I think in many regards, we have not seen the full potential yet. I think there is some barriers around regulation to prevent you from doing that. But, obviously, we would like to play a role in continuing to innovate, to not necessarily disrupt, but to kind of create new value pools and reach out to customers or reach out to consumers who've not been touched before, like the ones that I just mentioned. The underserved segment will go down to zero, right? I cannot imagine a world in, say, 10 years from now, where if there is a need, that need cannot be fulfilled in some way, shape, or form, right? There will be organizations and individuals who will go out and serve that need, because the ability to connect the demand and the supply, either in the form of an organization or in the form of individuals, can readily be bridged by the digital platforms, right? Including all the necessary checks and balances to do the KYCs, the relevant KYCs and whatnot. All of that will be done in such a way that if you have a need of anything, chances are, there is someone out there who will be able to serve that need, and to be able to discover and find that person. Actually, the discovery process is relatively seamless, right? The only thing that will then be a final barrier is connectivity. But again, I cannot imagine a world 10 years from now where, the Celcoms of the world, the XLs of the world, working together with the governments, will have every single nook and cranny of any country, completely covered by some form of data connectivity, right? So the word underserved to me, if I were to kind of again bring out my crystal ball, I don't think will exist in 10 years' time. Yeah. But then again, I would say that the consumers 10 years from now will be a very different set of consumers as well, because I think the expectations that they will have is that, anything that I need, it will be there, right? I will be able to find it. No, that's my point about network connectivity, right? I think every single nook and cranny in any single market, chances are you will have some basic level of connectivity, because it will become as basic as water supply and as basic as electricity supply, right? Which is, sort of network connectivity. So the two markets that we put, obviously the most visible one is Malaysia. We put a lot of investments behind that. But a lot of people don't know that actually we have a very sizable business in Indonesia as well. Not as big as the one in Malaysia, but actually the rate at which it's growing, it will surpass Malaysia very soon. And then beyond that, I think the market that we are also very excited with is Bangladesh, right? It is a fast-growing economy, and it's got a large and emerging middle class that is actually making it very exciting for us to sort of go in and support. But more importantly, it's got a lot of facets of the inclusion agenda that we, without technology, without digital services, can go out there and capture and serve, right? So I would foresee a version of Axiata Digital, sort of having a lot of innovation and a lot of experimentation happening in a market like Malaysia, but then really sort of going out there and building businesses in Indonesia, building scale in Bangladesh. I'll keep it very simple, right? I'll do 5, but the first 4 are people, and the last one is culture. People with the right capabilities, people with the right, if you like, mindset, people with the right, I guess for me here, it's ambition, right? So mindset is one thing around kind of thinking about how you would do things. Ambition, because with digital, you always want to kind of be able to push towards the moon, if you like, and you don't have that kind of ambition, it's always going to be a very, very big struggle for you. And then people with a lot of stamina. We do this in our interview process when we're looking for candidates. There is a certain mold that we try to stay away from, right? We're looking for people who are risk takers, who are disruptors. We're looking for people who will not, if you like, bring on their experience from their past roles and try to implement whatever experience they have onto the situation that is here and now, right? That there is some, for a lack of a better word, thinking agility, intellectual agility to be able to apply. And those and we're looking for people who are hyper collaborative by nature, right? That they recognize that in the digital world they cannot do everything on their own, that they need to find all those various peoples with all those various a variety of different capabilities and the diversity of strength to be able to meld together and come up with some magic, right? So we're looking at for people with sort of mindsets that could be quite different from what we see in a lot of large corporations today, right? So that's why, number 1 is people, number 2 people, 3 people, 4 people, and then actually the last one, just to kind of unify all of that, again, it's culture.